In the game of loans, you either win or you learn. Welcome to the game of loans, where fortunes are forged and empires are built. Your hosts, lords of lending and wholesaling, are here to guide you through the realm of real estate and wealth building. Brace yourselves, cash flow is coming. So now, you've been working with us for a little bit over a week, right?
Yes, sir.
What are some of the questions that you have about the business? Or, you know, I know you're more seasoned than let's say Ryan, but what are some of the questions that come to mind that you might, you know?
You know, when you were talking, you had mentioned the builders.
Mm-hmm.
And are you seeing builders take out bridge loans to get them out of some of their projects to move them on to other projects to keep their people working because the market has slowed? Are you seeing more bridge loans?
We're seeing a lot more bridge loans for multiple reasons. I would say the major reason is that right now the market has softened a little bit.
Yes.
And these guys don't want to get out of the prices that are being presented to them today. So they would rather take a bridge out, right?
Hold their price.
Mm-hmm. Suffer a little bit by paying interest on the money. But thinking that, which I do agree with them, I think, this whole situation with the tariffs and stuff like that is going to come to an end. And I think before the summertime, when the market gets hot, I think the rates are going to start downtrending again. And as the rates go down, what happens to prices?
Yeah,
they go up. Right? I that's the major reason why people I think are refinancing is to be able to hold.
Hold on and hold the value in the community.
Hold the value in the community, right?
Yeah.
So that
which is key important. A lot of
Yeah.
these communities we're seeing, especially in the $2 million market, seeing a little sag there.
Yeah.
What's hot right now is some of the rehab or some of the properties that weren't exactly ready to go in the 1.2 in this market, at least 1.2 to 1.9 market. Those are moving off the market quicker.
That's it's usually that. I mean, for the past 2 years, that's the market that got hit the worst.
Right. Now that 700,000, 800,000 market's the one that's getting hit.
Yeah. Yeah. I think the middle market, the upper middle class market is always the first market to get hit.
Mm-hmm.
Right. Affordable housing always goes off the shelves. It's completely recession or economy proof. Right. All those people are always looking for a opportunity to buy a house, and when they can get that opportunity, they're jumping on it, regardless of what the fuck's happening.
Yeah.
That middle class, upper middle class market, lower upper class market gets crushed first. Then the upper class, the luxury market, is also immune to any sort of financial situation because these guys always have money, and the rich people always get richer because in times like this, they have the money, and it's the golden rule, right? He who has the gold makes the rule, right?
Yeah.
So they go out there and they're offering,
yeah,
they're sitting on cash. So when they're sitting on cash, what do? You can make offers that are attractive towards you. It becomes a buyer's market, right?
Right.
So on the high-end markets, they're getting some good fucking deals.
Yeah, they are.
Very good deals. Even if they're getting into a $4.5 million house, maybe that's a $5.5 million house, right? When they're going in, they're saying all cash, 4.5, and they're getting it. In a year from now, that's going to be $5.5 million. So they just so they're able to do it. Yeah.
So then now we'll shift back to this role that I'm in pursuing new business as a loan officer or business development. There's the mix between the end user, the guy who's actually doing the fix and flip, and then the broker who is also out there selling loans to other people and using you as a backbone. How would you advise me to split up my business, percentage wise between broker, end user?
So when you go after the broker, remember the broker always is going to the broker's job is going to pin you against 5 of us.
Right.
It's us, and then whoever gives him the best deal. It's going to earn him the most money and give the best terms to the whoever the client is. Right?
Yeah.
And brokers aren't loyal, right?
Yeah.
Now,
I knew that as a wholesaler.
yeah,
My
you know
brokers
that.
were like, whoever's going to pay me the most, I'm
Correct.
taking your deal.
Right. I think it's harder to get to the actual borrower,
Mm-hmm.
but it's worth the time to spend to get that client for yourself.
Okay.
Right?
Good point.
That's because that guy is going to give us, you're going to come in cheaper because the broker you don't have to pay.
Mm-hmm.
Right? So if it was a point and a half to us, a point and a half to the broker, now you can go out to the borrower and say, hey, it's not 3 points, it's a point and a half.
Point and a half.
It's not going to be 12%, it's going to be 11%.
Mm-hmm.
Right? So you could pass that savings on, right? But also then you get to earn the trust and you get to have that borrower, that end user be yours.
Right.
And not the brokers. And that's important.
Do you see on your team, so for some of these developers and builders that you work with, that you actually go out and visit their projects in the different states that you lend in?
Yeah. I go, especially here, I go, when I'm in Arizona, I go,
Mm-hmm.
um,
I mean, basically anywhere you vacation,
anywhere I
you can go.
vacation pretty much that if we're lending to, I'm going to stop by, like I was just in New York, I stopped by 2 places in Brooklyn that we did.
Mm-hmm.
And I like to do that, not to even check up on the guys, is I feel a sense of accomplishment as a lender. Like
Mm-hmm.
I took a big participation in that project, right?
Right.
I helped fund that and create whatever they're creating. And every time I go, I'm like astonished. I'm like, damn, look what we did, because we're part of the team. Maybe I didn't physically go out there and build it, but if it wasn't for me, they wouldn't be able to get that done. And I love that. I love what I do. I really do. I think it's a necessary part of the business, right? Because so many people are not bankable, right? They're just not. And has nothing to do with anything except everybody's different.
Yeah.
If everybody were the same, then you would have, it'd be, everybody would be dressed the same, look the same, but there's a mix of people for a particular reason. And different people are in different circumstances. Somebody who's up and coming is not going to be able to go to the bank to get the same types of terms or rates that, somebody who's established and been in the business for 10 years can get, right? Mm-hmm. So they need us to eventually get to that place, right? And we're okay with it. I don't think, I tell everybody, some of the builders that we have that are expanding, and I tell them, I know you're not going to use us forever, but if you ever need us, we're going to be here, right?
Yeah.
And that's a good thing. We're not for everybody, and everybody is not for us, right? Mm-hmm. I like to tell people are like, even on social media, doesn't it upset you that people don't like you and talk shit to you? I go, no, because I don't like everybody and I talk to shit to a lot of people. I probably don't like more people that they don't like, and I talk a lot more shit about people than they talk shit about, right?
Right.
Not in a bad way, but there's people that tick me off on social media.
Mm-hmm.
You've seen that on my stuff. I'll look at that stuff. I'll be like, this guy's an idiot. I'm entitled to that opinion because it's my opinion. Somebody might look at the same guy and say, he's fucking brilliant. They're entitled to their opinion, right? The same thing when it comes to my content. People could look at my stuff and say, this guy sucks. He's horrible. I put myself out there and if I'm putting myself out there, they're entitled to their opinion of me.
Right. Absolutely.
And just,
I think you do a good job putting yourself out there. I mean, you're uniquely you. You express who you are. That's good.
Yeah, but it's not for everybody, right? I'm not for everybody, just like everybody is not for me. And that's what it comes down to in our business, right? But I'll tell you what, the greatest thing in our business, I'll tell you, is the fact that our product is money. Mm-hmm. And money doesn't have a shelf life.
Right.
And money doesn't go out of style. Right? Money is never out of fashion. It's always fashionable, and everybody always fucking needs it, right? Now, you are in a unique position where you could go out there and reach out to the masses And there's going to be more people that are going to need money than more people that aren't going to need money, right? And there's going to be more people that are going to need our type of money than any other type of money, right? Because at the end of the day, people that fall into that bank money are a lot less than the people that fall out of the box. So when I got into the business, the reason I fell in love with lending was because I got into the business of, I always liked the underdog, right?
Yeah.
And when I got into the business in 1989/1990, I was 17. I worked for an FHA lender. And believe it or not, back then, FHA was not as popular as it is today.
Right.
And the FHA loans were created for people who were underserved in the lending market, right? It was for people that didn't have the best credit. It was for people that didn't have the best credit. It was for people that didn't have top tier jobs.
Yeah.
They didn't have that much money. They couldn't go to a bank. And back then, to get a conventional loan or get a loan from a bank, you had to have 20% down and everything had to be pristine, right? So the underserved markets were not represented.
Right.
And I really loved that. And it was like, you know what? Shit, man, I'm going to be an FHA lender because FHA is helping the underdog, right?
Right.
And for a long time, that suited me. And people appreciated that. And my clients would always come back for a refinance and things like that. Lo and behold, fast forward to a point where today, everybody's doing FHA loans.
Yeah.
And it's
for everyone now.
It's for everyone.
Before, it was like if you pay your bills, but you just don't have the income, you have good, your credit's okay.
And you know
we
what?
have a loan for you.
When I used to close the deals, my clients used to thank me and hug me and kiss me and send me gifts. And today in that business, it's over. Now they're leaving you. It's become so different where you take the deal, 90% through, they get a call from some asshole from another company that promises them an eighth off of the rate. Right? Which even in their minds are so dumb, they can't even calculate how much that is. Right? It's time.
They take the deal.
I can say whatever it is. It's my fucking podcast. So they're so fucking dumb that they don't even realize, right? And they're going to leave you. And there's no loyalty in that business.
No.
And then when you close that business, you're never going to get the refinance. You're just not. Whoever is servicing the loan is going to call them and offer them a deal.
Penny Mac's big on that.
Penny Mac's going to call, Chase, and they're going to offer a deal that you're never going to be able to touch. So say la vie, and more than likely, that client's not even going to be happy with you because you want to know why? Some other asshole that they know that's a cousin of a cousin got an eighth difference in the rate, and you're a bad guy and things like that. In our business today is very similar to what FHA was meant to me, right? Because I'm still serving that underserved guy, but now in the real estate investor community.
Yeah.
And they're still thanking us and patting us on the back and coming back to us, and they don't really care about the rate as much. They just want the leverage or the opportunity to be able to get money to do something great. That's what we do.
Question for you. Someone who has, say they have 3 to 10 million, right? They've invested in the market. They have this money. They say, I want to loan this out to people to invest. How would they go about connecting? Would they connect with someone like you to lend it out if they don't have the means? I mean, how would they make that money work for them? I just had this question posed to me the other day.
The worst thing that someone could do in that situation is try to lend their money out on their own, because they're going to lose every penny of it.
Right.
They're not going to know what to lend on. It's almost like
they're not going to how to securitize it, who they're lending to, do the background, all those things.
They're not going to know any of that stuff, right? And unfortunately, there's more bad people out there than there are good people, right? And the bad people, I shouldn't say that. There are probably more good people than bad people. But I'll tell you this, the bad people have a very good way of finding people like this to take advantage of them.
Right.
And it's like, how I like to say it is usually doctors, right?
Mhm.
And I try to explain to them, hey, man, you went to medical school. You're an expert in, I don't know, pick something.
Gynecology.
Gynecology.
Right.
That would be like me going in and try to deliver a fucking baby.
Right.
Right? Am I going to be successful at it? Maybe the first one if nothing goes wrong, but if shit hits the fan, what's going to happen? So it's the same thing. And that's what they don't understand. They downplay the idea, oh, it's just lending money. It's not. It's not. It's being able to evaluate. It's being able to put the right agreements together that the guy's not going to screw you. So to answer your question, I would 100% reach a lender that's a private money lender,
right,
and ask them, say, hey, I have this much money. I want to put it on the streets. Can I partner with you? How can I partner with you? What can we do together? What do you recommend? And do it that way.
right.
I would not do it on my own.
Mm-hmm. Would someone come to you to do the same, to do that?
People can come to us. We're fortunate enough where we don't have a shortage of funds. We have more money right now coming from like insurance companies and places like that.
Right.
Where typically speaking, these people are going to be looking for more of a return. And when it's their own money, they're going to want more of a return for their money than we could potentially offer them.
Right.
So what I usually do with people that come to us, because we get a lot of people, right? Oh, I'm sitting on $3 million. I'm like, not to be a dick, but $3 million, it's not going to go far, in my world. It's just not. When it's a deal and a half. What I tell them, again, not to be an asshole, I tell them, look, maybe it doesn't make sense for you to lend money because you're also looking for a type of return that I won't be able to give you just to put your money out. You're not going to make 13% because I have to make something on this, right? And I'm not looking for that. What I'll tell them is, let me put you in a situation where you can make that type of return. If I'm lending, maybe I'll put you in on the equity side of it, right? And on the equity side, you can earn X, Y, and Z. Maybe, we know somebody that's looking for a second mortgage, right? And it's secure because we're on the first position. Then I can make you 15 to 18% on that. Still more secure stuff, but something that is more tailored to them. And they can make some good returns.
Yeah. I think that'd be great to, and there probably is out there a vehicle for them to park money in and share in the
100%.
Like
there is.
It's like a
there is.
different fund.
There's a lot. We're making returns for people anywhere between 15 to 20%,
which is great.
Annually is great. But it's different. We know what we're doing. For them to do it on their own, again, people get greedy.
Right.
And they're always looking at your pocket. Well, it's my money. Well, how much are you making? What the fuck do you care? Well, I can make 3,000% on your money. Are you happy with making 15% on your money? That's you concentrate on you. I concentrate on me. Right?
Right.
And a lot of people don't think that way. And I try to tell them, when you're putting your money in the fucking mutual fund or whatever it is, are you asking the mutual fund manager how much they're making on yours? No. Don't look at my pocket. Look at your own pocket.
They're always complaining.
Of course they are, but so good questions, Russell. Very good questions. You've been listening to The Game of Loans, where real estate battles are fought and won. Make sure to fortify your defenses by subscribing. Cash flow is coming, and we'll be back next time to help you claim your throne. The war of wealth continues.